Yeah, it's still the best thing in the world, dude. Honestly, multifamily investing has changed my life in ways I can never explain. Money, income, family, the gifts that I'm able to do, the people I'm able to help. So this business is truly real, and it could be a great. It's a great business, man. I love it.
Hello, everybody. It's Jake Stenziano, host of Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, I'm doing good, bro. How are you?
Always making it happen, big man. Coming off a nice weekend in Atlanta. Had Bill Ham there, master coach, making it happen, teaching on stage. You know, the events keep rolling, baby. We're doing it. We got a few weeks left for our food drive, feeding the kids for Thanksgiving. You can go to jakeandgino.com if you want to participate in that. And we got snow in the Ville today. It's not even Thanksgiving yet, so I got my level 4 Sherp on for the folks on YouTube. So we are definitely making it happen. How's it going over in the St. Augustine, Gino?
Well, everyone said it was white in Knoxville, and I said it's white in St. Augustine because I was on the beach this morning walking around. So, I'm doing good. Like you said, I was in Atlanta this weekend. The students are doing great. I think over 5,000 units they've closed, over $500 million in assets under management, which is great, right? I mean, they're crushing it, and there's no deals out there unless you look, unless you play the game, unless you really work hard, unless you get punched in the face. And you know the routine, right? You got to run through the wall in this kind of market. It's either money or deals. Right now there's money. There's not as many deals. It's going to flip, everybody. It's not going to be like this forever. So enjoy it right now. Start creating those substantive relationships. Start getting that money there, because when the deals show up, you better have the money.
All right, very good. So today's guest is no stranger to danger. He knows exactly what we're talking about. Today's guest is Corey Peterson. Corey has managed and acquired over $95 million in real estate across the country. He's a best-selling author of Why the Rich Get Richer and host of the Multifamily Legacy Podcast. So without further ado, Corey, welcome to the show.
Hey, right on, man. Dude, it's a beautiful day in Phoenix, Arizona. I am in my shorts.
Me too.
All right, man. So in Phoenix, rocking it out. I know you're going through a deal right now, getting punched in the face a little bit, but give us a little background. Tell us how you got started in real estate before we get to the pain today.
Yeah. So, man, I started in real estate just like everybody. I read Rich Dad Poor Dad and said that's what I want to do. It's funny. I started off as a wholesaler. I had no money, no credit, and I would go to RIAs, the Real Estate Investor Associations, find the dudes that had money and that were doing deals, and say, where do you like to buy? I find deals just like that. I was resourceful, and I'd go find them deals and make my $3,000 or $4,000 wholesaling fee. Back then, we were finding REOs and short sales. Then I realized I raised my first piece of private money in like 2010. I did it by accident. I was just asking a guy for help. He lived in a retirement community. I'm like, hey, do you know anybody that's over there in that retirement community? I could probably make their money work, give them 12%, give them no deed trust. And the next day he calls me, he goes, hey, Corey, do you still want to do that 12%? I was like, yeah. He goes, my home's paid for. I can borrow money at 3. You give me 12. I make a spread. How much do you need? And dude, that was the question. How much do you need? I'm like,
what you got?
I need $85,000. And it was a small pause. And he's like, yeah. Okay. Yeah. Where do you want me to send it? And just like that, I raised my first piece of private money, dude. And after that, it was game over. Once I learned how you can raise money, and what I learned is you never ask people for money. You only ask them who do they know. It takes all the pressure off, and the right people always self-select. It's always been the way I've done it for the very beginning, is share the story, and the right people will say, hey, I'm interested in that, and then it goes from there. And so last year we closed, fix, flip, and then I transitioned to apartments in 2011. And that was actually because I'm a lazy investor. What happened was the market was starting to shrink. It was hard to find REOs and short sales. I didn't know how to do marketing very well. It was like what they do now, direct mail. And I drove by an apartment complex. It's a little bit bigger story, but I drove by an apartment complex. And I was like, how can I buy an apartment complex and deploy all the capital? Because at that point in time, I'd raised maybe $3 or $4 million of private money doing single family fix and flips. And I needed to find a place to park it. And so I bought my first apartment complex 2011, $3.2 million. And I sold it about 3 years ago for $8.8 million.
Woo!
So it was a good win.
Woo!
That one retired me.
It's worth getting punched in the face, right? And sometimes it's worth it, right?
Yeah.
That's great.
So
I want to dive into some of the tips to raising money because they're intimidated. Two things that our students are intimidated are, number one, calling brokers. They're intimidated about calling brokers, and number two, creating that pitch, that opportunity to raise that capital. Can you go through some of the tips that you use?
Yeah, man. And this is my story because, man, I was the kid that I was a poor farm boy growing up. My family didn't have money. If we had money, we spent it. I had a lot of limiting beliefs about private money, honestly. I mean, here I was, a professional. I actually I was a financial advisor, Series 7 and Series 66 license, yet I still had a lot of issues of is the money going to know that that I filed bankruptcy, that I didn't, wasn't great at managing money, all those limiting beliefs. And what happened was, what I really learned about it is, man, if you will just present yourself and your opportunity. So what I say by that, what Carl taught me, Carl was the guy I played racquetball with, and really he unlocked it. I mean, it is simple. It sounds as simple as, don't ask people for money, just ask them who they know. That one principle, Gino, is, in other words, you create I call it a pitch deck, or for me, we call it credibility kit. We don't do a pitch deck unless we have an accredited investor, that's the actual deal. But our credibility kit is the sizzle about why apartments and what my company does in that space. And so what I've learned is, all you do is go and you start with friends and family. And why? Because they love you and they'll let you make mistakes. Practice on the ones that care about you. But the truth is, they'll lead you to money. They really will. Mm-hmm. And that's exactly what's happened. I started telling everybody I know my story, my credibility kit. I had a couple pages that why apartments, what's happening in the apartment world as far as the space. We talk about baby boomers and all the millennials that they don't want to rent or own anymore. They want to rent. Baby boomers are looking to rent. They're getting out of selling their houses. So I create the storm, and then we just then the apartments are solutions, and we buy broken stuff and fix it up. And so at the end of the day, it's just telling that story to as many people. And if you do it in a way like this, Gino, hey, listen, I want to share with me what I'm doing because I really think you could lead me to some people that Could you critically look at my story here and poke some holes in it? I'd really value your advice. And then I just go through my story. And what I did by subliminally is I just gave you some embedded commands. Look at my stuff, critically pay attention, and poke some holes in it. And what happens is you're paying attention. And the right people, I believe, always self-select. They'll go through the whole thing and they'll be like, well, what about me, Corey? I think I'm interested in this. And there you go. Well, hey, listen, if you want to give me some money, let's talk.
I can piggyback off that real quick. I want to share a story with both of you. We are at Multifamily Mastery 2, and I think it's the emotional component also. There was an older gentleman there, and he loved our family. My family's selling swag at the booth, and it's also a long game. You don't expect to raise money in a week. So this gentleman's name is Robert Porter. If you're out there, I'm giving you a shout out because I met you at Multifamily Mastery 3 this year. So he was there, and he met the family, and he liked the family. And then when we went to do our second raise, he went out there and he just called up and he says, I like you guys. I want to invest in your deal. So from meeting my family, meeting the brand, and enjoying everybody, he's like, I like to do business with you guys. And just having that emotional component and not hitting them with all the numbers. Go to their croc brain, as in the book Pitch Anything. Go and make it an emotional context. Make it about the story. And then you can go to the analysis. And if they want to go into the analysis, pull it back and make it more emotional, because that's where you have to hit them. Because once you have that emotional and you pull it in, then their guard comes down, and then you can start networking with them.
I've even got so far as I have an emotional pitch. I talk about Susie income. My Susie income story is, hey, listen, Corey, what do you do? I help people like Susie. Susie was married for, almost 27 years, a husband, and they were kind of semi-retired. They had some money saved up. He was still working, and unfortunately, Susie's husband passed away, and Susie was in a really bad spot. because, she still needed that husband's income to kind of survive. But luckily, Susie knew me, and I was able to show her how to, invest in deals. And we were able to give her a better return than she was getting in the stock market. And that allowed her to have, because she was distraught. And anyways, at the end of the day, we help people like Susie. That's what we do, is we help them get better income. And
so talk a little bit about the organization and the overarching strategy of, on the apartment side. Like we really strive for our blue ocean. I think we've talked about this before, is that customer service piece in the C and B space. Talk a little bit about, what you're doing for management, and then what you're trying to achieve actually in your communities.
Yeah. So, man, we believe in trying to put together a superior product in that B and C space. In other words, you want A-class management, where it's something that's not being serviced. Like in our communities that we buy, just like you guys, that's not being served. In other words, hey, if someone has a request to fix something, man, it's got to be treated like it's a big deal, and it needs to get done and properly and fixed. And it really is about communication. So internally, it's two parts. One is our communities, and I think one of the other part is, how do we communicate with investors? So we've actually invested in our company to have a portal. We use IMS. If you guys are familiar with IMS, it's a little more expensive. It has a little bit more breadth, and I think it'll help us grow to the level that we want to grow. But our investors love that piece. Our investors love it because they want a center hub. And we've actually taken it to where we have a relationships manager that takes everyone in, do a Zoom video, just like we're doing now, and walks them through the process, takes them into the portal and says, clicks, and has them click things, and we click it for them. So they can we call it portal adoption. We want all our investors to be portal adopters, right? We want them to go online. We want them to look at their statements, and so they can answer most of their questions that way. We think that's key. It builds trust. It truly builds trust. And then all communications happen through that portal. All our documents get loaded up there. That's been a huge piece that we've added this year in 2019, and we're just now getting good at it. It takes some time.
So how did you start out with when you first did your first syndication and you raised your first thing? How did you do it? And, if anybody's out there that wants to start the syndication, were you Excel spreadsheets? Were you Google Docs? What did you use?
It was Excel spreadsheet, right? I have this one deal. I have like 7 little tabs. Like, did I, get there in a cabinet with files, right? So, every time they assigned a PPM, then we had a check mark that we had their file in the computer and in the deal. We had another check mark that says, did we send out the welcome email, right? Did we handwrite? And I'm a big believer in this, guys. You know this. Handwriting thank you cards, right? I do it. We handwrite a thank you card to everybody that gives us money. And then we have a whole follow-up onboarding process to get their ACH set up, because we want to send the money through ACH quick and fast, And so it was all a bunch of check marks, honestly. But, you start there. You don't have to start at the freaking machine that's way big. You just do a deal and put it in Excel. That's fine. That's good enough. That's version 1 is always better than version 9. I'm a firm believer in that, because I feel like I've made every mistake there is. It really is, right?
Mm-hmm.
But
version 1 is better than version none, Jake. He's talking about the customer experience. That's what he's talking about. And if anybody wants more info on that, they should read Joey Coleman's book, Never Lose a Customer, again, because he goes through that process. And I think that process never ends. You keep adding systems and systems and systems, and don't be overwhelmed by listening to all this. But you're always thinking about, it's just like real estate. You're always thinking about the end in mind, right? What's your exit strategy? And that's how you build your customer experience. Pull yourself out. And if you walk into a restaurant like I had 10 years ago, what's that customer experience look like? How do you want to be greeted? How do you want to be seated? How do you want to be entertained, wine, dined? How do you want to be followed up when you leave? There's so many different parts of that customer experience. And it's important that you do that in your business. But Corey said something really important: commit and then figure it out, because you don't have to start with the Rolls Royce. You can start with the Hyundai and then move up. And that's how all of us do it.
That's how all of us do it. To where now even we have we call it an investor packet that goes out, like it's a binder that has like all their sign docs, whatever. And then on the spines, because, we're going to send this binder FedEx. Why do we send it FedEx? Because important things get FedExed. That's the only reason, And so we want our investors to, like, they get a little box and it says FedEx. Oh gosh, what's this? And they open it and there's a big thing that says, warning, read this first, and it's because it's important. And we want them to put it in their bookcase. And, there we have their, at the end, or at the part of, we have a big bold, their quarterly distributions that they should be expecting. And it's for every deal. So if we have multiple investors in every deal, they can look at their bookcase and be like, oh, wait, I've got 1, 2, 3, 4, 5. There's all my checks. Hey, honey, look at my checks, that are coming.
It's not what you say, Jake. It's how you make them feel. That's what it sounds like to me. So
and getting those checks out.
I like that.
Yeah.
How do you select your market? Like, what markets are you looking at right now? Can you mind if we go into some underwriting, like what you're looking for, your criteria on your deals?
Yep. We say the Midwest and South, but truly, we've been looking pretty hard in Oklahoma. So Oklahoma, we've kind of transitioned into Texas a little bit. I would like to own in Phoenix, but I've really been trying to find some deals in Phoenix. I'm local to Phoenix. I love the economy here, but it's so hard to cash flow in this state.
Why? What happened? What happened in that market?
Cap rate depression. Cap rates are so low that it's hard to, but the flip side of that, and this is where we're looking at maybe altering our model a little bit, is the growth component every year will catch up. So it's really about, what we've had to do is maybe say, hey, can we not do a pref to the investors in the beginning, because there's so much more, on year 4 and 5, that it's not a 3% growth rate. It's like 6 or 8 year over year. I mean, that's how this economy in Phoenix is. So many people from the East Coast are migrating to this state, and you have California. It's got just a big door open, right? Everybody's trying to get out of that place. Taxes are horrible there. And so really, we were really trying to focus locally in Phoenix, and really Tucson would be the other market. So Tucson and Phoenix, and then we like Oklahoma. And sometimes I pick states just because I have family members there and I want to figure out how to get close to them and go visit them.
Workations.
Yeah. So those are the 2 states right now that we're super hyper focused on. Oklahoma is not super exciting. It's just that we think we can just cash flow. It's always just been real steady. And I like steady because cash flow is what we look for. We like it when things go up. That's great. But truly, we buy for cash flow.
If the cash
and a long-term play.
Jake, what you're saying, Jake?
Hey, baby, if it don't cash flow, let the grass grow. And in Phoenix, it might be a little too hot for grass. So we're keeping it in Oklahoma. All right.
We like the Oklahoma market also because I think it's more of a linear market, like you're saying, Corey. And I don't think institutional money hasn't gotten there yet. So it's not a sexy market. I mean, California, people are still living there because it's beautiful. The weather's beautiful. The people are beautiful. You've got Hollywood, whatever. And that's why it's still viable. But once that rubs off and you start taking 65, 70% of people's income, it starts saying, okay, let me go move to Oklahoma City. That's why businesses, I think Oklahoma is also really a business friendly state because they have to attract the capital. So as far as you're saying cash flow, I mean, what kind of other metrics are you using as far as cap rates, cash on cash returns? What makes a deal attractive to you? What are the value adds you're looking for in a deal?
So right now we're looking for micro repositionings, right? We've been doing a lot of student housings, but we're almost now, this is probably our last student housing deal that we're going to buy. We got one under contract now, but we've got maybe now 6 projects that are student housing properties. And we tend to get a lot newer property in that. 2006 is like our oldest house or complex, but for us, that's the proximity to the dirt, to the college is the key factor in student housing. Mm-hmm. So if we're not close, we're not buying it. It's got to be really, really super. On 3 of them, we're across the street and you're on campus. And then 1, we're just about a block away. So that's close enough. Some of the other metrics that we're looking for is, I call it micro repositionings. We're looking for that 90% occupancy right now. 80, we'd love it if it was 90, just 91 so we can get Freddie Fannie debt on it. But we'll even, 85% occupancy. We like the occupancy play. That seems to happen a lot lately with just bad operators. And then we call them micro repositionings, where if you'll just give the customer service, because it works not only with your investors, it works with your tenant base too. Just let them know you care, right? In other words, fix some of the broken stuff and be responsive, and then set up, ways to attract the right tenant base. In other words, we're big into SEO and for our websites. We know that we want people to come in through our websites than actually walk into the door. We know if we get a person that applies from the internet, it's a way more qualified buyer, tenant. It has a better credit score, and they tend to not, do as much damage to the property, and they tend to always pay a lot better, and they tend to have usually a way better credit score. So our average credit score in our B and C properties are, I think it's like 685 or 687. That's high for B and C properties, and more C than Bs. That's one of our biggest criteria for us. And when we look at properties, we know that we can affect it. We're just really good at we'll use pay-per-click, Google pay-per-click. We can target local markets or local businesses that have the type of tenant profile that we'd want, and do some micro, ads for that type of target, geofence it. That seems to be really, that's one way to attract the right tenant base. And that fills up our properties. I think right now, most of our properties all our student housing projects are like 99, 97% filled up. And that's really how you make lots of money, is when you're full occupancy.
Time to raise the rents.
The rent's on the rise.
Yeah, it's my favorite hat, right? So rents due, baby, always.
So Corey, let's talk about this most recent deal. How did you find the deal? And just give us some walking points of, the struggles, the challenges with it, and what you intend to do with this deal. Yeah,
I'll talk about I was going to wait for my podcast, but I'll spill it right here. I'll give the preview of what happens, right? So this is called being an entrepreneur 101 investor, and all the things that can go wrong will. Murphy's Law is always at work, right? So we actually found this deal, it's in Weatherford, Oklahoma. It's a student housing project. Actually, one of my students found it, so they just used our tools and went to work, and it was a broker relation that they'd been working on for a while. They did the underwriting. It made sense. So we did a site visit. It looked like it said it did on paper. It felt good. So we put it under contract for $11.75. Going to due diligence, realized that it needs a little bit more work than we thought, more paint, more, there's a lot of dry rot, and this was a seller that was a REIT, is an institutional buyer that had developed the property. And now they had a bunch of kids running 18 months older than the kids that are living there, running the thing. And which is, for us, we have adults running our properties, especially on student housing. We just find that mom and dad want to rent and lease up to an adult. So we hire adults to run our student housing projects, and we make our adults live on site too. That's a big key component for us. They got to live on site. And our maintenance guy has to live on site too. That helps us shut down the keg parties. Going through this process though, I call this seller's coma. This is a real thing. The previous school year, they went to 95%, and despite of themselves, with the inmates running the asylum, right? And while we're under contract, there's something about when you go under contract, and you got to have little clauses, I think, in performance clauses in your contracts now.
Yep.
You have to have performance clauses. We didn't. Don't ask me why, but we didn't. We will from now on, I promise.
But that's a big tip. Everyone stop and really sink in what Corey said. He made a big mistake. He's owning up to it. He's responsible. He's going to do it in his next time. And I'm sure he's going to go back to his attorney and say, what happened to the performance clauses? Maybe you don't use the attorney for the next one. I'm just saying
that
it
happens.
Blame all you want. It's his fault, obviously, but it's ultimately our fault because we read the contract and it wasn't in there. So performance contracts, everybody write that down. That's really important.
Yep. So luckily, we caught it before we were done with due diligence. And So we really have we call it 30 business days. When we write our contract, we say 30 business days in due diligence, which is actually 45 calendar days. It's a really actually pretty long due diligence period.
Yeah.
And we just blame it on our third party. Like, hey, listen, I'm not doing the due diligence. I hire a third party, and they have a responsibility to do all this work and get all the vendors out there to bid everything. And there's no way that they can do it in this short time period. And so we're just like, if you can't agree to that, then we probably should just move on. But if you want surety of close, we're pretty good. You should let us stick around and do what we do. And so they did, but we negotiated a $500,000 price decrease because of the occupancy, because it went from 95 to 82. It's a big difference.
That's huge.
It's a huge difference for a school year. And the only reason is truly, this is how bad it was, Gino. When we're doing our due diligence, it was right in the middle of summer. You know, it was 3 days that we're at the property. Well, those 3 days, the kids running the asylum had closed sign on the door. They're not closed. Like, we're just in a little room. We're not being evasive, but I'm telling you, we watch probably 4, 5, or 6 cars a day pull up, get out, go to the door, get back in the car, turn around, and leave. Gone. And we're just like, oh my God, you know. And finally, you know, on the third day, the real manager shows up for the regional, and then the sign came out. And so that's what happened. So seller's coma, we experienced it, went from 95 to 85. Now that changes your loan metrics.
Well, Corey, it's not only the seller's coma, it's employee coma, because they were still hungover, and that's why they couldn't get the open sign on the door. So you had some issues, you know, underlying there that caused the seller's coma.
Dude, the door is locked, and we walk in, and they're playing Jenga.
Yeah.
They're
Was it the big Jenga? Was it the cool one, though? Like
yes,
in college,
it was the cool
like the 2x4s,
Jenga,
the tall. Yeah, and I like that.
The college version, man.
Cool. Yeah. It's good.
And so they're all playing Jenga with their friends, man. And so we're just like, now, so we like this problem because we know we can fix it, but we didn't like it from 95 to 82 because
you didn't like it that much.
We went from permanent financing to like a Freddie Fannie product, maybe, to now it's a bridge to perm loan. Well, those are, you know, innately more expensive and a little bit harder, you know, to achieve. And so we pick the company that gives us the best terms. Bedrock Capital. I'm going to say their name right now.
Someone's not happy.
I'm really ticked off. Bedrock Capital. Those idiots. Okay, so they agreed to give us a $7.4 million loan, which means that we're putting it's a 65% LTV. Okay, that's pretty good LTV. Yes. That means like Corey's have to raise lots of money, right? It's a $5 million raise for Corey Peterson.
Good for the bank, not for Corey.
You're right. So, but it still works, and those are what we underwrote initially. So that was our number anyways. So we're realists. We always operate under real terms, and then we hope that we can make them sweeten it. So now we go into the 65%. Now here's the, you know, once you engage a lender, so you got to send them $70,000. So they engage us, put us in play. So we send them, and we do. So we sign their contract, and we send them $70,000, guys, because that's, you know, on the bridge to perms, they are inevitably, their application fees are usually a lot more than your traditional Freddie or Fannie products. It's okay. So we stroke the check, and now we're having weekly, you know, they have a kickoff call where everybody's, you know, hi. Then like, here's all the things you got to do. There's a bunch of checklists. Everybody's got to work. You got legal and all that stuff. We're going through all this. Every week we're on a conference call, and somewhere in about, I don't know, the fourth week, they're starting to say like, hey, we still got to go to committee. And I raise a flag to my lender, to my broker, my mortgage broker who gets the loan. I'm like, dude, I don't think they've qualified this deal yet. It doesn't sound like this. We're in the, like we've bagged it. And we go in. So here's what happened. A week before closing, guys, I'm supposed to close on what is today? The 12th. I'm supposed to close today. Last Tuesday, they send me a letter and call me and say, we went to our final committee and we're not going to do the loan. Thank you, but we're not doing it. Bedrock Capital. Don't ever use them.
They're with the Flintstones, Gino. You know, Barney messed that one up. Okay.
So Jake, there's a couple things that I see when you work with banks, right? I think you have to be really responsive with them. When they ask for something, you better get it over. And if you have 3 partners, you better tell your partners to move their asses, to get their personal financial statements in, to get their 6 months of bank statements. You get it over them because they take time. And I will guarantee you every single closing that Jake and I have done, whether it's a refi, they need something overnighted. They've been doing this since Jesus was born. You think they'd have the process down where, you know what, I need these documents, but they don't really care. It's your loan. So I can complain all I want. And Jake knows I've been on vacation so many times. Jake last time was at the Floridian in Orlando.
The last 2 times.
That's right. And he was down
the business center. Thank God Disney has business centers. Seriously.
Yeah. So we can complain all we want, right? But the reality is that you have to be ready, and you better get your partners on board, and you better get your team members on board to get that stuff over.
We work like crazy. We do. I mean, like, it really is when, you know, they have
Corey,
a checklist.
how much money do you have up hard right now?
Well, $430,000. Okay, $430.
That's some scharol right there, huh?
Right? No. So they give me this call. I'm freaking out. Like, day one, I was not very. I'm not going to talk about day one, right? Or like I call it D-Day, right? On D-Day, when they drop the Hiroshima bomb on me, I was like, dude, I've got $430,000 hard. My first thought is, we got to figure out how to work. We got to find a solution first and quick to get lending. And there's no way I could get it done in a week. It's not going to happen. So I'm going to have to get an extension from the seller. And this has never happened to me.
How much more do they want?
The new lender?
No. How much do they want for the extension?
Oh, well, I'm a master negotiator, guys.
Ah, sneaky.
So $25,000 more in additional earnest money.
There you go. Okay.
But they wanted to release $300,000 right away.
Oh, so that's poof gone regardless.
Yeah, because I'm going to lose it anyways. Truly, at this point in time, I'm going to lose it. So I agreed to it. So $25,000 more, and which was great. And he gave me a full month extensions. And truly, I mean, I call it, this is when you have this call, guys. By the way, it doesn't go to the broker; it goes directly to the seller. So I called the broker first and said, I need the seller's number because I'm bringing this information owner to owner, buyer to seller. It doesn't go through the broker and then try to get watered down. Yeah,
right? That's going to be that goes south every time.
Yep. And so I had to say, listen, this has never happened to me. I don't even understand. And, you know, here's the letter. We sent them kind of everything that, like, this is totally out of my control. And, you know, I really want to buy your property. And I think you really want to sell it, you know, but we're going to have to kick the can out because now I got to find another lender. And so, and I had to understand that I'm hoping this goes right, but I don't know it's going to. And we're talking about also power of your mind. I think.
You only got a month.
I only got a month.
You shouldn't even be on this call right now.
Yeah, I know.
He likes it.
But listen, but he said a month, but he also said, but if you need more time, we'll probably give it.
He's being reasonable. That's good.
Yeah. Like, because a month even is like, dude, how do we put this together in a month?
No
right?
shit.
So we found another lender, Lima One. It's, you know, now we went from 6% to now it's 7.75 on the bridge. Well, you know, does the deal still work? Year one's profit's gone, right? So for Corey, you know, I'll wipe all my profit. I'll still be able to take care of my investors, but my profit's gone. But what's worse, losing $430,000 or not making profit for 1 year? We all know the answer to that. So we're gonna experience. It'll hurt. Now it's gonna hurt. And I think this is like par for the game in this
full contact sport we're in, folks.
No one talks about the dirt, dude. I mean, we're talking about dirt. This is a real experience I'm having, and it's not pleasant, but I'm still pretty optimistic. This is going to be a great deal. I'm going to make millions of dollars off this property.
You still got creamed by Khalil Mack, but you can get back up from it, right?
Yeah, you know, so, and really it's having the perspective. And my wife was talking to me. She's like, you know, how do you remain so calm? And I think that's the job of when you're the guy leading your team, your group, you've got to have your wits, man. And you can't just get too excited and go off the handle.
Honey,
You've
this is
got
just
to
another day at the office. You know, you should hear half the shit I don't tell you, right?
yeah, man. Like this is just what happens.
Yeah.
Even, for ones that are new, they're raising money. Their first time they're raising $1 million, or like it's a nervous energy. But you got to have a deep belief in yourself and your team, and then you work your butt off to get to the end of the line, right? The goal.
Corey,
So,
hold on. My wife last night was saying the same thing. She's going, "You're being a bear today. What's going on?" I said, "You don't want to know." I said, I'm going to project. I'm maybe projecting right now, but it's not even worth bringing it into our bedroom at this point and having this conversation. Just let me be. Tomorrow's a new day. Let it evaporate, and we're going to get back on it, because this shit happens every day to a real estate investor. You're constantly getting punched in the face, and we all experience it. So sometimes you got to let it out, and it's good to talk about it. But if we brought all this stuff home and had these conversations, it would be like what do they call it? Like a insane clinic or something, because it's nuts, man.
It would hurt people, because I think that is the greatest skill set I think that a lot of us have, is the ability to stay calm under pressure, under fire, because it's always happening. And I think that's one of my greatest gifts too, is just that with you guys the same way. It's, man, I stayed calm. I directed my team. I made some calls and got everybody back on track and said, solve for this, solve for that. We're going to do this, call this guy. Let's get everybody involved. And we put it back together. And just this morning before we got on this call, I wired my extra $25,000, and we're good. We're on track, and we'll solve it.
So before we get to the short answer, what else could you have done differently, or what learning lessons have you learned other than the performance clause? Maybe working with lenders, or.
Man, so I go back and ask. So this is the call I had with my mortgage broker. I go, Aaron, have we ever closed with Bedrock before? Have you ever done a deal with Bedrock before? He goes, no, Corey, I've not. And so I wrote that down as a little note. When I'm talking with my mortgage brokers, I need to know if they've ever transacted with the lender. If we're going to bring on a new lender that they've never done business for, we need to have way better track record.
Certainty over terms.
Yes. Yep.
Certainty of close over maybe the most attractive terms. Yep.
Yep.
I like it.
Because Bedrock provided the most attractive terms, and it really made our deal look good. But see, here's what happens, right? And now we're all up in it, and it smells kind of bad, and so, but we're going to take the egg on the face. We're going to learn from it. And so now I think going forward, we'll put this piece into it and say, okay, do we understand this lender? Can we count on the lender? Because when you got,
these folks are dead. I mean, there's no going. Yeah,
they're dead to me, dude. I can't wait to get on my podcast and talk about how really ticked off I was. I'll probably say a little bit more F words than
That's the beautiful thing though about having, the exposure that you do though, is because if people are going to do you dirty like that, and you have an opportunity to let other folks know this is who we like.
Because they said they tried. We tried.
You didn't try hard enough. Is the money in my,
So Corey, could you have gotten a couple other quotes? Let's say you went to Bedrock and a couple others, because a lot of them overpromise and they underdeliver. They're going to give you a 15-year term, but it's really 10. They're going to give you 4.2 interest rate, but it's really 4.6.
Oh, they were going to give me like 8.2 in funds, and then went back to 7.4.
Yeah. So I mean, like,
dude, for moving the goalposts, man. Holy
they move the goalposts. So how can we avoid that? I mean, because I've got a lot of students who will come, and with Rain Cap, they'll say, well, we can give you this, and it's a cardinal deal, and there's no way you're getting those terms in a cardinal deal. There's just no way possible. Yeah. And you want to say to them, trust but verify. And you don't want to say, this is what they're going to tell you, and they're going to move the goalposts. So how do you avoid that?
Man, I think there's inevitably a part of that. I don't think you can always, but you sure can ask lots of questions. You're trying to, this is the first time this ever happened to me, and I've been doing this business since 2005. And so, I
think it's that experience though. And like the amount of times, and to his point before, the amount of times you've closed. Have you closed with Bedrock before? No. That's, to Corey's point, that's the red flag. So the folks that you've done business with, even personally, that's where you want to, if they have certainty of execution and you see it, that's where you want to be.
And I was relying on my broker. So now I've got a question of, okay, broker, right? We've closed lots of deals together. Now this looks bad on him too. And he's just like backing up. He's like, dude, my fee's gone, right? I'm not going to charge. This is I got egg on my, which was the correct response, by the way. Right? Because he values my business as well. And I value him, but I'm like, dude, this can never happen again. Like, this is that $430,000 amount of stress. Let me plant that on you, bro. Because when he first called to tell me this, I was not in the right frame of mind. I said some I was pretty upset. It's pretty hot. Like, are you kidding me right now? Like, this is real money, dude. This is not Monopoly. We're not playing the game Monopoly. This is life. And I got $430,000 hard. Do you think that money grows on trees? Right? So I need to know how we're going to fix it. You need to give me solutions today. And I was very direct, but I was like, at the point,
rightfully so,
you have to be, right? Because squeaky wheel gets the grease, and he already knows. But after, now that I have time to digress and kind of say, okay, what went wrong? And it's really, and this is the solution I think every entrepreneur does, is you go back and say, okay, let's game plan this thing. And Gino, you've asked the right questions. How will we fix it next time? How will we make it better? How will we improve it? That is the only way you grow in this business, is to not be afraid to make mistakes and be resourceful enough that you can solve problems. And then you retool and refix. And now we have experience, right?
Yes.
We have experience.
Yeah.
But
School of
experience
Hard
goes
Knocks.
a long ways. Yeah.
Mm-hmm.
All right, gang. Hey, let's take a quick time out to hear from our sponsor. Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created: buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply. All right, we are back, and we're done getting punched in the face today. We're going to take it to a high level of goodness and positivity here. Corey, I want to know what your best habit for success is.
My best habit for success is waking up and having my great cup of coffee and really trying to go outside and meditate and just enjoy the morning. I believe I just like to be at peace for a good 30 minutes, pray to God. And just, I love, especially right now in the fall, and we call it fall, we don't call it winter. Like, we have a long fall season in Arizona. So it's great. And I just go out there and I enjoy it. And in summertime, not so much. It's a little harder to do it in summer. But I think that one aspect of clearing your mind and getting at peace for yourself before you start your day is golden.
The only way to make it in real estate. Best tip for someone scaling their multifamily business.
Don't go too fast. Don't scale it fast, man. This whole business, I believe, is a slow play. I say that, you can, what's going too fast? I don't know. If you can do 2 deals in a year, that's pretty dang good. If you did 1 deal in a year, that's pretty dang good. So, but I think people, when I see most successful people, they don't try to go super fast. They just build it correctly and take their time.
You mind if I jump in, Stenziano, for a second?
I'm waiting for you, bro. I see you. I see you down there.
I totally agree with that, unless you have systems and you have great partners like Jake and Dylan and Josh, because you can't do it by yourself. If you're willing to share the pie, you can go quicker.
Yes.
We were stuck at 600 units because we were using a property management software that sucked, and we didn't have enough team members, and we were doubting the market. So we weren't ready to grow. But if we had the proper systems in place, we could probably have 3,000 units right now.
And it's where we were up here mentally. That was the problem.
And there's no, and listen, like Jake always likes to say, who cares what somebody's closing on Instagram? They're not closing 500 units. They're syndicating a little piece. But don't compare yourself to others, because others have more experience or different experience from you. So don't compare yourself to others, because that's not fair to you, and it's not fair to the person you're comparing yourself to. So if you want to scale and get quick, you're not going to do it by yourself, because multifamily is a team sport. Your
Amen
vendors,
to that, brother. That's sage right there.
Yeah, your employees, and get your ego out of it, because it'll make it a lot easier, because you don't know everything. You can't raise capital. You can't underwrite deals. You can't do day-to-day property management. You can't be on a podcast. You can't do all that stuff by yourself. You can learn it. You know, the I'm a mentality, when you first start out, you should learn it. But then as you want to scale, you start getting people around you that can help you and start adding value to your journey.
Amen to that.
What we like to say too is that it only takes one, and Corey is a testament to that, because he said it only took one to set him free. That one deal cashed in $5 million on it. Yeah. Mm-hmm. So folks, you know, you want to do one deal a year, that can be the deal to set you free. So
that is a fact of life, dude. One deal changed your life forever.
Mm-hmm. All right. What was the biggest mistake when starting out?
Not understanding thy partners.
Ooh.
Right. I had a deal where the first deal, the one that I made all the money on. I went into it with two guys that were unethical, and I did a lot of work on underwriting the property. I didn't do as much work as underwriting my partners. And know thy operating agreement. Okay. And if I'll underscore and line that 3 times, only have your attorney draw it up. Because it really is important to understand who does what and when and who has control. And, you know, I had 2 unethical guys that changed the operating agreement right before we closed, where I was going to have 75% ownership and 75% voting rights. And I got 75% ownership, but then I had 33, and 33% voting rights. And it was all my money in the deal. And I had no control at that point.
I wish we were at a concert right now or somewhere, and I would say, by a show of hands, who had a crappy partnership? And I will guarantee you, everyone listening is going to have it. But don't let that stop you. That's a limited belief. That's a mistake that Corey made, and he learned from it. And it was just, I guess, a couple more years of pain. He still made his $5 million. It was a long game. But don't let that stop you. Let that lead a learning lesson. I've had a lot of crappy partnerships. I mean, I've got a fantastic one right now and other ones. So you learn from making mistakes. And then that's why if you start small, Corey didn't start small in that deal. But if you look back, it was only a $3 million deal. It escalated to $8 million. But just learn the process.
Yeah. You know, I always say to do deals, don't do partnerships. I love doing deals with people. And I like to be able to have the freedom of, hey, let's do a deal together. This is a good group, right? And it makes sense. Let's do this deal. We all can agree to the deal. And then, but the next deal, it may be some other people in that deal. And that's okay. I'm not married to this one partner for life. Unless that's kind of what we said, like, hey, we're going to be like the Jake and Gino show. You guys formed that bond and said, let's go out and do it together. And then we'll still bring outside people, right? For me, it was just, you know, for my company, then I would go out, but I'd do deals and not do partnerships. And I believe in that a lot. That's one of the most sage advice I ever got, is to make it about a deal, and everybody can agree about a deal. And maybe the next one works. Maybe the next one is different.
When you're checking out the moral compasses, make sure they have the same true north on them, right? You want to make sure that those moral compasses are aligned, and one's not pointing up and one's not pointing down, because I think that's where a lot of these things suffer. Go ahead.
I was going to say too, also, understanding what everybody's responsibility is.
Yep.
Man, that's where I see the biggest problem of, well, you know, I didn't know I was supposed to do that, or you know, really defining what your role is. What are you supposed to be doing? For everybody is very important.
What about a book recommendation?
Well, can I do a shameless plug?
You can only do a shameless plug first, but then you got to give us something else.
All right. I'm going to shamelessly plug Copy Your Way to Success written by Corey Peterson. You can get it anywhere they sell books online, right? So Amazon, Apple, whatever. Great book. I read 2 years of my life on an airplane, okay, writing that thing. And there was a couple of times where because that book should make you laugh, cry, and hopefully inspire you to be the best you possible. But as I was writing it, some of the pain stories, they're so painful and so deep that I'm crying as I'm writing them on the plane. And I'm just, one moment I kind of caught myself, like, are they looking at me? Because maybe they're thinking, like, this is my last email. Like, I might be going to jot the plane or something.
Is this thing going down?
But my other one that I really, truly love is called The Richest Man in Babylon.
Woo! Love that.
It's not a big book, but 1/10 of everything I make is mine to keep. That's my favorite quote from that. But it really talks about how you can get the responsibility of money and being a master of money. And doing it and it's taught in parables. It's really good. It's really good stories. I love the storytelling on it. Great book.
The Richest Man. I love it. Okay, I'm not going to ask what project you're excited about right now because I know you're excited to get this one over the line and be done with it. So how can listeners get a hold of you?
Best way is through our website, kahunawealthbuilders.com, or check out our podcast, Multifamily Legacy Podcast.
Bling, bling. G-Dad, anything else for Corey before he hops off?
Dude, we could talk for like another hour at least because it's been really informative. And I think everyone should just go back and listen because there's a lot of nuggets in here. I mean, there's a lot of stuff that Corey went through in his journey. It's all about the long game. I mean, he touched on partnerships. He touched on markets. He touched on what you shouldn't do. He touched on it's not an easy business. Nothing is easy, right, Jake? If you want to do it, it's not easy because a lot of people don't want to do it. So just think of it that way. And I just want to thank Corey for being on and sharing his story and being open and transparent.
Yeah, it's still the best thing in the world, dude. Honestly, multifamily investing has changed my life in ways I can never explain. Money, income, family, the gifts that I'm able to do, the people I'm able to help. So this business is truly real, and it could be it's a great business, man. I love it.
It is the vehicle, as we like to say. So, Corey, thank you so much. G-Dad, I'll catch up with you later.
Bye, guys. Thanks,
See you guys.
everybody.